So the consumers out there are getting their credit scores from these places, and it just doesn't match what I get very frequently. Right. And that's a hard pill to swallow.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
So when I'm dealing with a buyer, a lot of times they'll have questions of me. Hey, Harv, can I or should I or would I or should I not or what? These are the questions that come up. A couple of them are this. One of course is, can I go out and buy my appliances, and can I go out and buy, and I know the answer to that is, no, don't spend any.
Please don't.
Don't use any credit until we close your transaction.
Right. Well, and see, that's even for me, that goes a little too far, because it doesn't have to be as extreme as that. It doesn't have to be stop using credit, right? When you're in the process of buying a house.
Right. No major purchases.
Continue your normal behavior.
Oh, okay.
Whatever is normal for you, that's what you want to do. Avoid the unusual, those special purchases. And then certainly anything that needs to look at your credit on the basis of extending you new credit, that's something I'm sensitive to.
Okay.
If you have your auto insurance company check your credit because you want to get better insurance quotes, please go ahead and do that. That's not going to cause me any problem.
Good.
What we're concerned with is your ability to take out new borrowing that we have to take into consideration.
Okay.
People are really, really sensitive, and we've almost instilled it and hammered into them. Be careful of credit inquiries, right? Don't let it's going to hurt your credit and all this kind of stuff. And yes, it is true that a inquiry on your credit where you're applying to a credit card, an auto loan, a mortgage, counts as a negative to your credit. Right? And why is that? It's a negative because you're out seeking additional credit that you have no history of managing yet, right?
Okay.
And so that's a slightly negative thing. So what I generally advise people is you want to be selective and protective, but not fearful of getting your credit checked. If you do all your mortgage shopping within 30 days, really only the first inquiry is counting against you. The others won't have any negative impact.
Should I close that account? Should I close? I think I'm going to close that account so I get better credit.
Generally, please don't.
Right.
The logic behind it is, I have this, and I'm making this up here, but I have this account that you've had for 5 years. You've paid it on time for 5 years. Everything is going great. You suddenly pay and close off that account. Now it stops talking about you going forward.
Oh.
It says, well, they paid on time 2 months ago and 3 months ago, and the further and further away from your last activity, the less positive that is in your credit score, right? So it's not that it's actually harming, but it's no longer boosting your score up, saying everything is going okay right now.
But it also diminishes your capacity to
when
borrow.
You're talking about credit cards specifically, your available credit is a very significant factor in determining your credit score. So if you close accounts, especially credit cards, you're reducing the amount of credit you have available for you, and therefore the credit that you are using becomes a larger percentage, which is a negative. The next one people do is they will take money and they'll pay off cars, or they'll pay off student loans and these type of things. That is a different kind of mistake. Because generally you're taking large sums of money to pay off the account. Paying off an installment loan is not necessarily positive to your credit score. Because in the credit score formula, how much you owe on your car has no impact to what your credit score is. What's being measured is how long you've had the account, how long you've paid it on time, those type of things.
Gotcha.
But the actual amount you owe is irrelevant. Here's the negative side. You've now closed a positive account. It said good things about you 3 months ago, but it's not talking about you now, right? And so the more accounts that you can have open saying good things about you right now, the better off you are. Don't pay off collections prior to buying a house. By taking a collection account and suddenly paying it, you're doing a huge disservice to your credit score. Because like installment loans, the balance that you owe on your collection has no relevance to your credit score. What's being measured is when did that collection occur? Right? So it goes off of your last activity date. The older a collection is, the less damaging it is. Right? The newer it is, the more damaging.
Makes sense.
And so when you go and you pay that account, you're resetting that activity date. So instead of looking 3 years old and unpaid, now it's from last month and paid.
Oh boy.
And last month is way worse for your credit score. Now, I don't want you to pay off the collections, except if you can negotiate for the collection to be deleted from your credit file. So I get on the phone with the creditor and I explain that I'd like to settle this issue out, but in order to do that, I have a certain amount of money I can give you.
Right.
But B, I need to know that you guys will delete it from my file as if it never existed.
Right.
That's the big thing.
Okay.
Because if I can get them to agree to do that, when I pay it, now it gets removed from my credit report. The collection never existed at all, right?
Nice.
That's your highest good and really my recommended way of dealing with collections from the past. I will warn you, don't set up payment plans with them.
Oh, okay.
Because once you've made a single payment, they got you.
You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio.